Hello there. Welcome back to all level accounts, Zimsec. Uh, Today we want to look at the question paper of November 2023. This is paper one, and we are going to look at the specific questions. We are not going to go through the whole paper, but we just look at specific questions. So we are going to start with question 7 on that question paper. It reads, which ledger section is accounts, um, is accounts of credit suppliers. So you'd see that we've got three different types of ledgers that we have. We've got the sales ledger, which is the trade receivables ledger. We also have the trade payables ledger, which is the purchase ledger, and we also have the general ledger. So according to the responses that we have there, you'd see that credit suppliers, we see them in the trade payables ledger. But if they are credit customers, that's when we see them in the trade receivables ledger. So the correct answer that we have there is C. So we are going to have our C as the correct answer. But obviously, we are now going to the next question, which is in the ledger, returns of goods by a customer is. So these are returns that are coming back into the business. So they are returns inwards. So we are just going to check the responses that have got returns inwards, that is A and C. And then I will try to find out whether we debit or credit. But remember, when we sell those goods, we are supposed to debit the debtors account. But when they are returning, it means we are going back, we are going to the opposite of the debtors account, which is we are crediting now debtors account, and then we debit returns inwards account. So we have got C as the most appropriate answer that we have there. Then we can move on to the next question, which is number 9, which is a payment of insurance was recorded in the rent payable account in error. This is an error of, remember, insurance and rent payable, they are all expenses, so it means they are in the same class of accounts. So when error is made within the same accounts that are in the same class, we call it error of commission. But if they are of the different classes, we call it error of principle. So number 9, the appropriate answer that we have there is A, which is error of commission. Then we go to the next one, which set of accounts has debit entries in the trial balance. So we are just going to look at the ones that are supposed to have a debit entries in the trial balance. So if you go through the responses that we have, let's try to see on the responses that we are given them. We have got discount allowed there as the first question. So you see that discount allowed is an expense, so it has got a normal debit, which is correct. And then returns inwards also, we see that it has got the normal debit again. So A is correct. So we are having A as the correct answer there. If you look at the other ones, we've got discount allowed and returns outwards. So which returns outwards has got a credit balance, which is out. And then we've got a discount receipts and income account, and all income account is credit balances. So it's out again. And then we discount receipt again, it's out. So we are left with A. So A is the most appropriate answer that we have there. So can just maybe indicate our A. So we are saying we have got A here as number 10. Then we go to number 11. Which accounting concept was used when a cash payment for rent and rates was recorded both in the cash book and the rents account? So you'd see that this, according to the responses that we have there, you will see that A is the most appropriate. Remember, double entry is a double effect. We are supposed to enter a transaction twice, which is exactly what is being highlighted in this explanation. So we have got a double entry as the most appropriate answer that we have there. And then we go to the next question to try to see what exactly do we have on number 12. And number 12 is saying which accounting concept states that policies and methods adopted should be maintained. Remember, this is a consistent concept, very clear. We know the double entry just says every debit entry has got a corresponding credit entry, and it will got a double effect, which is not part of this explanation. Matching again is just an explanation on the matching of expenses income in the same financial period, which is not there. And then prudence also, we know that it emphasizes on not overstating revenue or profits. So it's out again. So for consistency, there is the most appropriate that we have there. you'd see that this is the most appropriate that we have. So I will go to the next page to see what question we have there. So if you go to the next page, we are now moving on to number 13, which is saying a statement that shows business performance for a specific period is, we know that a statement that shows our business performance is an income statement, but the one that shows our business position is now the balance sheet. So our income statement C is the most appropriate that we have there. And then we go to the next one. A list of assets and liabilities of a business on a given date is A. It can never be a bank statement. Remember, it can never be a statement of changes equity, but it can only be a statement of financial position, which is C. So C is the most appropriate that we have there. Then we can move on to the next, which is number 15. When preparing financial statements, unused stationery is shown as, I remember unused stationery at the end of the financial period is an asset, but stationery that has been used during that period is an expense. So this is what we have. So we have got B as the most appropriate on number 15 there. Then we go to the next one, number 16, rent received in advance at the end of a financial year. Remember, when it's a prepayment, it's the one that has been received in advance. So it's a prepayment of an income. Remember, rent received is an income. So whenever we've got a prepayment of an income, it's a liability. But when it's an accrual of an income, it's a current asset. The opposite is true when we are on expenses. Whenever we are saying expenses, when it's an accrual, it's now a liability. When it's a prepayment, it's not an expense. So the most appropriate answer that we have there is C, increase current liabilities. So this is what we have. Let's try to see what the next question that we have. Then we have got number 17, which is saying a closing entry for bad debts written off is, remember, the initial entry for bad debts is that we debit our bad debts. We debit our bad debts. The initial double entry that is there is we debit our bad debts, and then we credit the debtors account. Then when we are now posting the bad debts to the profit and loss account, it means we are now going to the opposite of bad debts, whereby we are crediting bad debts and then we debit the profit and loss account. So we debit profit and loss, and we credit bad debts. So this is this is the closing entry that we have now. It's applying on this part. So we are saying the most appropriate answer that we have there. If you go to C, profit and loss, debit, profit and loss, and credit bad debts account. So you put C. That's the most appropriate answer that we have. Then we can go to the next one. Which one is shown as an expense in the preparation of income statement? We know that examples of expenses, we know them. We've got commission ends, and this one is an income, it's not an expense. Decrease in provision for bad debts is an income again. Then increase in provision for bad debts now becomes an expense. And then inventory of stationery, obviously, this is not part of an expense, but only can be part of a current asset. So we have got the most appropriate there being increase in provision for bad debts, which is our C. And then we can try to see if we've got another question. There we can move on to the next page to see what we have. There we are now on number 19, which of the following items is debited in a trade receivable control account. So remember, the most appropriate answer there, if you check, we have got our dishonored checks. There they should be on the debit side of the trade receivables control. Remember, bad debts, they reduce debtors. Remember, the debtors balance that would have the trade receivable control below the debit side. So when you have bad debts, we are reducing. So you're going to almost say you're going to credit. Discount allowed again is going to reduce the amount that we have for that one. Would see that the most appropriate that we have there is dishonored check. Because when it's a dishonored check, it means it's a check that has not been processed at the bank. So instead of reducing when it was initially issued, was or when it was initially received, it was supposed to choose the debtors the change was amount, but when it's now disordered, it means we are reinstating it. So we are supposed to put it on the debit side. So we put C as the most appropriate answer that we have there. Then we go to the next one, which is number 20. The number 20, cost of repairing a building, of repainting a building was treated as a capital expenditure. What is the effect on net profit and non-current asset? Remember, repainting is a revenue expenditure. So this one was treated as a capital expenditure. So it means we were supposed to put it in income statement under less expenses. It was supposed to reduce net profit. So the effect on the net profit, obviously, is that it was supposed to reduce net profit, but it didn't reduce net profit. So net profit is going to be overstated. So overstated, they are only left with A and B. So you're left with A and B. Then on non-current assets, it means on the non-current asset part, we are going to have an overstatement of a non-current asset. Because when it's a capital expenditure, it's going to increase the value of the non-current asset. So in this case, it was not supposed to increase, but it was treated as an increase to that current asset. So that's an overstatement, so it was overstate. So we have got A as the most appropriate answer that we have there. Get it as A. Number 21, which of the following is a capital expenditure? Remember, capital expenditures are those expenditures that are going to increase the value of that current asset, or they are initially coming as non-current assets. So what we are using there is for installing an air conditioning system in the building. So remember, when we are installing an air conditioning system, it's coming as a non-current asset. So obviously it becomes a capital expenditure. So let's look at the next expense that we have to pay rent for the buildings. You know that rent is an operating expense, so it's a revenue expenditure, which is out innovating part. Whenever we are doing something, it becomes a revenue expenditure. So this one is also a capital expenditure. Then for repainting again, we are doing again, so it becomes a revenue expenditure. So we can just back it out. So we are left with A. There is the most appropriate answer that we have. We can as well move on to the next question, which is now number 22. And it is, what is the source of information for discount allowed and trade receivables control account? So you see that the information for discount allowed, obviously we get it from cash book. So our cash book is most appropriate that we have there. We can move on to the next one. Which of the following items is used to update the cash book? Remember, we have the items that are used to update the cash book are items that we find on the bank statement that won't be accounted for at that point in time in the cash book. So if you go through the responses that were given, you see that bank charges is clear and one that is most appropriate there. Those bank charges, they are only adjusted in the bank statement, but you can only come to know them when we get hold of the bank statement. So A comes most appropriate that we have there. You see that bank errors they affect bank statements, but the case correct their errors. So we are not supposed to adjust errors. We don't have to update errors, which is wrong. Then we go to uncredited deposits. These ones can only affect the bank statement and going to affect the bank reconciliation statement. They don't affect the cash book. Then unpresented checks the same, they only affect the bank reconciliation statement. So we've got A, most appropriate there. Then we've got 24, which one following is a liquidity ratio. So on liquidity ratio, remember the most liquidity ratios that we have is the current ratio, asset test ratio, and most common ones. And then according to our responses that we get there, you see that the most appropriate that we have there is rate of inventory turnover is the most appropriate that we have there. So the ratio that shows the position of the availability of cash in the business is what we call the liquidity ratio. So we've got D as the most appropriate ratio because of turnover. Then you can try to see something else about this person. We've got number 25, which is calling balance was extracted in trade payables ledger. We're given information there, and then the person is saying trade balance on 31 December 2018 was. So obviously, we're going to open a T account there so that we can be able to find that trade payables balance of 31 December, which is end of that figure. So we can just try to open account whereby we are saying open balance is we are given 50,200. Obviously, it's a trade payable, so it will be on the credit side. And then this is our trade payables. And then I will check on the next item that we are here. There is credit purchases. So remember, whenever we have credit purchases, they increase the amount of trade payables, so they come on the credit side again. 30,700. And then for the set off, when it's a set off, it comes on the opposite side, on the debit side. And then our payments to suppliers, obviously they reduce the amount that we are owing to suppliers, so we put it on the debit side. Remember the debit end that we debit trade payables, then you can pay for cash, depending on the methods of payment. So if you balance this, obviously, let's try to see. Yes, that credit side is going to be the better side. Let's try to add there, whereby we are saying 15,200, and then we add 40,700. You are going to get your total of 55,900. So we are saying here, 55,900, and this one will go both sides in between the double lines. Then we subtract what is on the credit side. We are now saying 55,900 minus 8,200, and then we subtract again 2,300. Then obviously we are going to get 45,400. So our answer is 45,400. So you see that that answer we have it on a B. So B becomes the appropriate answer that we have there. So we got B. Then we go to the next one. The following details were obtained from the books of a trader on 31 December 20. This is the information that we are given there. We are given that information there. Let's try to see. And this was on 31 December 2020. So we are given cash book balance. Then we are given unpresented checks, and then we are given deposits not yet credited. So we are trying to see how we can calculate that. So what we are supposed to do, remember, we're starting with balance SP. SP cash book balance, we are given it as a credit balance into cash book, so it means it's a negative balance when it's a credit. So we are just going to present it as a negative. And obviously we are supposed to add and present it, which is 3,500. So it will adding 3,500, and then we are subtracting deposits not yet credited, which is 5,000. So subtract here, like this, subtract. So this is what we have. Then we subtract this and we see what we get there. So after calculating, we see that we are going to get a negative 2,900. And then the balance that is being said, asking there is the balance as per bank statement. So when it's the final balance that we are getting here is balance as per bank statement, and it's a negative, which means when it's a negative, it will be on the debit side of the bank statement. When it's a positive, it will be on the credit side of the bank statement. So this one is on the debit side of the bank statement, which is our negative 2,900, which is a debit. So we are saying D is the most appropriate that we have there. So this marks the end of our video. Thank you for listening. And those who have subscribed, please subscribe and share. We're still coming with more videos. Yes, for this video, I'm signing out.